So, as we all know, AI stocks have absolutely ripped this year across the board, whether it's semis, photonics, energy, memory, especially memory, it's all up a lot. In my opinion, we're at a point where not every AI stock carries the same risk anymore. So, you have a lot of names that basically 10 or 20x'd. And along with that, there's a lot of high beta names out there that when things go south, we see what happens. Like right now, we're currently having some dips. We're seeing what some of these big names are pulling back to, these big AI names that we all know of. So the point of this video is essentially to introduce you to some stocks that'll let you, sleep easy at night and be able to go on throughout your day without worrying about the market too much and knowing you're in some good names that'll survive big pullbacks and even crashes. I'm Alex with ODW Financial, and this is not financial advice. So as you know, as I know, the AI trade is not just the chips anymore. We don't just have Nvidia going absolutely bonkers. This year we had some crazy gains all over the place. For example, we had semis, we had AMD rip, we had memory, we had SanDisk. Oh my god, did you guys see what SanDisk did? We had Western Digital along with that. We also had Photonics, for example. We had Bloom energy stocks. So we had some big rippers across the board. So that doesn't mean that you absolutely should not buy any of these stocks that went up, because as we know, even though a stock goes up, it doesn't mean that it can't go up more, which is why you should always leave runners. But that's like another discussion. The point of this video is just to introduce you to some stocks that will expose you to the AI trade without necessarily stressing you out on major pullbacks or even crashes. So to start off here, my first pick, which may not be a surprise to some, is Microsoft. And I think this is really good timing because it is currently at $384. So it's on quite a dip. It was just at 460 on June 1st. The market is worried about like its capex spending and stuff like that. So in my opinion, I think it is a safe dip buy because they have their feet in so many different things and they have so many different ways to generate income. As we all know, they got Azure, they got Office 365, they got Windows, gaming. They just have so many different things that are working for them. Some better than others, you could argue about their gaming. But, it's Microsoft. In my opinion, they are not going anywhere, and I bought it at 360. I will buy it more if it goes down even more. So we'll see. You never know. But I am in this for the long term. The dip buys on this one have always served me well, and I will keep buying the dip. So this is my first pick right here. So the next one, which may not come as a surprise to some, is Google. So with Google, you're getting a few different things. As we know, they have YouTube, they have search engine. Everybody uses google.com. Along with that, they have Google Cloud, and Google Cloud is growing faster than both Azure and AWS. So it is very fast growing and they are making a lot of money. As you see, you are not getting the same dip buy as you would be on Microsoft. On this one, it is up 100% over the last year. And if we look here in April of 2025, I was buying around here during the tariff stuff because Google was one of those companies I felt over the long term is very undervalued, but was going to do very well. And as we see, it has ripped quite a bit, but in my opinion, I think it still has a lot of potential while also being pretty stress-free. I have not really stressed about owning Google too much. So my third pick here is Nvidia. As we know, they have been absolutely dominant in that space when it comes to GPUs and hardware. They got their CUDA software, which is pretty much like locked in everywhere. Nvidia has not slowed down in terms of their numbers. Don't get it twisted. Their growth has not slowed down at all. Their stock price, though, is a different story. It has not been climbing the same way that we're used to, but it has also not been dropping crazy. So in my opinion, it has been a safe buy, and I think it continues to be a safe buy just because of how incorporated they are into that space and how many things they have going for them. So Nvidia is my third pick here. It's not as safe as Microsoft or Google in my opinion, but I would continue buying the dip on this one. So Amazon is my fourth pick here, and this one is an interesting choice because of a few things. So first of all, AWS. AWS is huge. Growth is absolutely major, as we know. They got that Prime revenue. They got people all over the place subscribed to Prime. Let's be real. I have a Prime membership. I know so many people with Prime memberships. It's crazy. On top of that, they got their own chips that they're working on. So when we start getting into that conversation, they are getting into some landscapes of other companies that have been dominating. So, you're looking at some major things under development with Amazon. And in my opinion, it is a great buy. I have been buying it. You got AI exposure and it's safe. So I will continue buying the dip on this one. It hasn't brought me the greatest returns in the world in the last 5 years, obviously, but it has survived whatever downturns there have been. So my final pick here is Avgo, Broadcom. Their AI semiconductor revenue is way up, and that's already on top of a networking and software infrastructure business that is very profitable. So with Avgo, you got them building their own AI chips for the hyperscalers. So they got some very tight knit relationships with some very big companies, least of which not being Google, which is also on this list. So Avgo is my final pick here. They got revenue coming from other sources, although a big portion of the revenue now is the AI portion of things. So this one is a little bit riskier than some of the other names on here, but in my opinion, still a great buy. So that wraps it up. These names are not necessarily going to get you 10x returns in like a year, like Micron or SanDisk or some of these other names. But if the market goes bad and things go south, and they go really south, your portfolio over the long term, and I'm talking about 3, 5, 10 years, will remain intact. Most likely, nothing is guaranteed, but most likely it will remain intact because these are, in my opinion, some very solid companies, and I do put my own capital in them and a good amount of it because I depend on them to keep some stability while also exposing me to some good growth and to that AI space. So that's that.